I'm Margret Trilli. I am the CEO and Chief Investment Officer for Impact Assets and Impact Assets Capital Partners, which is a SEC-registered subsidiary of Impact Assets.
Okay, what do you guys do? What's your focus?
So we are a little bit different in the space. So we're an impact investing firm. We serve 2,000 clients who all have their own unique definition of what impact is. One of the common themes is climate solutions in their impact investing. We have about $3.5 billion under management, and we do between 250 and 350 investments a year in the private markets, which is pretty unique and pretty high volume for the private market space. So we moved about $400 million last year to investments across multiple impact themes, covering people and planet. On the people side, folks are really interested in equitable access to things like affordable and sustainable housing, to access to capital, to access to education, jobs, and job skills. And on the climate side, where we have a lot of interest from our clients, it's everything on the spectrum from energy innovation to energy generation and storage, to natural solutions, and everything across the gamut. Last year, we invested in 270 investments, and over 100 of those were in climate alone.
Okay, so can we elaborate on that model a little bit more? You said 2,000 clients. These are high net worth individuals that are diversifying their investment portfolio by setting a portion of their money with you guys and asking you to invest that on their behalf, or?
Yes, it's a complicated answer, but we were founded 15 years ago, and we were founded on the premise that impact investing should exist, that people should be able to both meet financial objectives and meet some social environmental objective, and in particular that philanthropists, in particular foundations and donor-advised funds, should be putting that other 95% away. They give away 5%, but the other 95% is just kind of sitting there in stocks or whatever. And the idea is that that money can be moved, as well as the grant money, to move the needle on the causes that you care about. So we had a variety of products in the very beginning 15 years ago. One of them was a donor-advised fund, and that really took off. That's where the majority of our 2,000 clients are. But in 2021, we launched Impact Assets Capital Partners so that we could take all that work that we were doing inside the donor-advised fund to advise clients to move all that private markets investing to outside of the donor-advised fund. So our client base now has expanded to include corporations, family offices, institutional investors, and foundations.
And just double-clicking again on the model, do you then source opportunities and present them to your clients, and they make a final decision if they want to back that, or do they blindly trust you to place their money every year and get X yield, or how does that work?
It's all of the above. So we do investment advisory, so we do, especially on the donor-advised funds, but also outside of the donor-advised fund. Our clients will ask us to help them actually even to create the strategy, so we'll help unpack what they mean by impact and what their version of impact is, and then we figure out how to make it investable, matching their financial objectives. And the idea there is that we then go and source, we do due diligence, we make recommendations. Sometimes we're just deploying the capital on their behalf, other times, and most often, they're really involved in making the investment selection decisions. And then over time, we've noticed some centers of gravity around the themes and the investment objectives of our clients. And so we now run 23 funds that all sort of get at some combination of the financial objectives and impact themes. And we do have a fund dedicated to climate, and climate investments are in most of the discretionary funds that we run.
And how do you source how to match the capital with, like the deal flow, I guess?
Yes.
What's the channels?
It comes from a lot of places. A lot of the deals come from our clients themselves. They're active in the space, going to conferences, hearing about what other investors are doing, and they're asking us to look at those and to help them with execution on the deal. A lot of times we're doing the sourcing, and we have an enormous database of thousands and thousands of funds and companies that are working to move the needle in the impact space. Those come inbound. We also are constantly landscaping to see who's out there, what's up and coming, who might be raising next year or the year after or right now. It just depends on who we're moving money for in the moment.
And do you have like a sweet spot or like an average in terms of who you typically invest in, like the stage and the size and, I don't know, traction?
Yeah, this is a really unsatisfying answer. Our answer is everything. Because of the breadth of clients that we have, it's all the stages. It's debt, equity, project finance, private credit, just basically everything. Funds and companies. We'll do project investments. We invest in intermediaries like CDFIs and green banks. So we're out there with all that. So it's really unsatisfying, and sometimes people come to us saying, oh, we've got this thing. You invest in everything. You should invest in us. But it really has to do with who in the moment we're looking to move capital for. But our check sizes vary as well. Our average is, last year was $1.5 million, but we'll go as small as $25,000, at the idea stage. And our largest investment was $155 million. So it really does span the gamut.
So how do startups in the clean tech space in particular get in touch with you to propose or pitch their opportunity?
Well, please don't blow up my inbox, which is happening on a daily basis. We have an intake on our website at impactassets.org and also one on impactassetscapital.com. And both of those websites have an intake where folks can get into our database automatically and also keep it updated, which we really appreciate, because sometimes, of course, companies will have multiple rounds, funds will have multiple funds, and so just knowing where everybody is really helpful for us to manage our pipeline and our landscape analysis.
So, given the huge inflow, I can imagine that you're getting, you must have seen so many pitches over the years. Do you have some recommendations, advice for the entrepreneurs watching, good, bad, and ugly, what they shouldn't do, how to kind of filter through the noise that you must be working your way through?
Well, I think like most investors worth their salt, we're looking for a pitch that has a really good demonstration of why this team, why this market, why this product, is there product market fit, why your customers would buy this, why it's needed, what's the problem you're solving. And in the case of the financials and the impact, we're looking for really good modeling and realistic execution. We remodel everything, and on the bad and the ugly side is when our model comes out wildly different, and folks are trying to come up with just the hockey stick because they think that's what everyone wants to see. And what we want to see is your judgment and how well you know your market and how well that's incorporated in your modeling. And we do care about the financial model. We really care about the impact model as well. And what we're trying to figure out the most is, can you execute? And sometimes that doesn't sing in a pitch. Sometimes people take for granted that we believe in the impact thesis, or that the financials would be obvious. But all of that has to be spelled out, especially if we're going to take it around to the breadth of clients that we have.
Do you have any success stories, any names you can talk about that you've invested in or your clients have asked you to invest in that have gone on to do very well?
Yeah, there's a few we can talk about. Beyond Meat, it was one of our early investments which IPO'd a number of years ago. That's in the consumer packaged goods space and alternative proteins. Generate Capital was one of our early climate investments doing energy generation and storage, and they've just been a terrific partner over the years. And we've also invested in Devoted Health in the healthcare space, which is really revolutionizing access to healthcare.
Okay, very exciting. So it feels like ESG or climate or impact investing has sort of emerged out of nowhere the last 10 or so years, and now some people are saying that it's sort of peaked, and I know Vanguard is sort of trying to give their shareholders sort of the choice of opting out from ESG, and there are other examples. Do you feel like ESG has peaked and there will be less interest going forward? Or how do you think about that?
I don't think so. I think it really has staying power. I think what we're seeing happen is there was, as you mentioned, a lot more interest and awareness about what we're supporting in our portfolios, and in particular, the younger generations and women and foundations were looking at their values and not seeing that aligned in the portfolio, and just wanting a general, to feel better about what their investments were supporting or not. And once that caught traction, then you had a lot of financial services players rushing in to, with a solution to sort of catch the market with something that wasn't very authentic. And I do think we're seeing a retreat from those players that weren't authentic in the fund space, which I think is good. But I don't think we're seeing much of a retreat on around the sentiment that people really have behind it. And people do conflate ESG and impact investing a lot. We sort of think of them as public markets versus private markets. And the public markets, it's just a different, it's a whole different game. There's someone there to buy your stocks when you're divesting and vice versa. And really the only way to have impact there is to vote your proxies and to shareholder activism to try to influence the companies you're invested in. And on the private market side, you actually have much more, of an impact by placing your money in something, and much more influence if you're a larger investor or a check writer. So it really is, in our view, the place to play if you want to have impact is the private markets, and we're not seeing anything tail off there at all.
Okay. And what about the incoming administration? Trump, obviously not a huge fan of clean tech or green tech. Will that impact your ability to keep attracting new customers and deploy funds, or how do you think of that?
I don't think so. What we saw in 2016, one of the first things that happened was the climate page came off of the White House website, and that invigorated people a lot. We refer to it as the Trump bump. We saw a lot of giving to nonprofits who support climate solutions, and we saw a lot more investing. And I think we'll see a version of that this time. It will look different because the market is in a completely different place. I think the train has left the station. In Trump's first term, he tried to resurrect coal and was wholly unsuccessful because the market had moved on. Better, cheaper, faster, solutions are out there. And no matter what, he couldn't get people to buy more coal. And if the market doesn't want it, it's not going to happen. And he's declared an energy emergency, which, I might be able to make a case for. The demand for energy is skyrocketing. So we do have, I guess, an emergency, I suppose, but it's more of an opportunity, and we need all the forms of energy to meet that rising demand. And, favoring one sector over the other is not the solution. But I think the markets are going to take us forward, and the train has left the station.
So looking ahead then, why is this a great time to be an investor in climate tech, green tech, or being an entrepreneur in this space?
Well, it kind of comes back to what we were talking about earlier. One of the things we look at in evaluating an investment is the market. This market is not just growing, but it's growing exponentially. You've got AI coming online. You've got all the cryptocurrencies needing massive amounts of energy, data centers. The demand for energy is skyrocketing there. And a lot of those players are not okay with being beholden to the grid. They want their own sources of energy, so distributed energy. And really, they're not setting up fossil fuel, examples of that. They're setting up solar panels and, they're buying their own wind farms. So all of this is happening in the private markets regardless to address that gap in energy. And one of the other things we're really interested in achieving, regardless of what side of the aisle you're on, is energy independence. That's one thing we can all agree on. We don't want to be beholden to foreign powers to power our nation. And again, you need all the sources of energy coming online to do that. So the electrification of everything is inevitable. So it's a great time to be in this space because the market is sailing. The rising tide rises all boats. And there's room for everybody in the space. And there's a lot of headroom for innovation, too, which is really fun and exciting.
Very good. Appreciate that. Thank you very much.
Of course. Thank you.